Wow, brutal crash in the silver price in the past 2 days, down 9% on Friday. There are actually 5 different factors, all negative for silver. Short term, we're going to go through all of them right now, and we're going to talk about the most important levels that we need to pay attention to for silver. Let's get into it.
Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month.
Welcome to Hot Trades of the Day. My name is Daniel Wilhelmi. Second day here on Deutsche Goldmesse in Frankfurt. I'm in between meetings, so I thought I'm going to record a video about silver and what's going on in the silver market. Ooh, what a brutal day on Friday. Silver down 9%. I mean, the market clearly showing the big middle finger to leveraged silver long players. And again, this shows you what I've been saying on this channel for months. Do not use leverage in a market like silver. You saw yesterday what's going to happen to you. I mean, it was flamethrower to the face for clearly investors with leveraged positions that were betting that the silver price, after it marked a new high, the second high, a higher high, would go higher, at least go to 90. So they probably had very, very tight expiration dates. And look what happened. They got absolutely crushed. Now, that is one reason why silver went down. It was ding-a-ling-a-ling. Here's the margin call. First factor. Second factor is the gold price. The gold price obviously went down yesterday as well, over 2%, down $100. Ouch, ouch, ouch. Now, I had the prediction to the gold price down to a T. That was great. Silver, we'll have to determine that, but short term, we have to say I was not right on it. Let's see if we're going to be wrong on it. We're still fine. We'll talk about that in a second. Gold price, though, I told you, if we drop below this upper end of the blue support zone, we're going to go down $100. That's basically exactly what happened. But you know what the deciding factor is, and you saw that we tried to defend it. 4,500, ladies and gentlemen. That is the line of demarcation. That is the line. We go below 4,500. We're going to go down straight to the 200, the golden line that you see here, probably the uptrend. But if we defend it, there could be buyers coming in here for gold. So gold is weak. Silver won't be able to decouple. It did a little bit in the past weeks, but it was basically gold was doing okay and silver did much better, rather than gold is going down and silver can completely decouple. That won't work. So that's the second factor that's problematic for silver that led to the sell-offs. Right? We have a weak gold price. Why is the gold price weak? Well, I've been telling you on this channel for weeks, watch oil, watch the dollar. A few videos ago, I told you, hey, pay attention to the dollar. Something is happening in the dollar. It's trying to regain the 200-day moving average. And look what happened in the past 2 days in the dollar. And there you have one of the main reasons for the sell-off. We broke the 200 and we broke the 50 and we broke the downtrend in a monster up move for the dollar. And obviously that's going to lead to a sell-off in gold and silver. I mean, that is a huge move that we saw in the dollar. We have seen this a couple of times. As you can see here in the charts, we saw it here in March. We saw it here at the end of March. Now let's wait and see. But clearly, the dollar strength, a major headwind for gold and silver short term. The third factor is the oil price. I told you about the oil price. I said, hey, watch the oil price. The 50-day moving average is holding. Watch out for it. This doesn't look nearly as bad as some of the bears are saying. Look at the chart now. Oil breaking. It's not breaking out, but it broke in the downtrend. Let me draw this in for you real quick. Here we go. Shooby dooby doo. Man, I gotta hurry. I got a meeting in 7 minutes. So, downtrend, broken, confirmed break out above the downtrend. Oil prices trending higher. That obviously fuels the fears. See a wordplay there? Fuel oil, huh? Come on, give some credit to the crowd here. Fuels the fears of rate hikes. I mean, the concept of, well, rate cuts, that's basically off the table. Now it's just rate hikes and how many could it possibly come. That is negative for gold and silver as well. Again, short to midterm, not long term. Long term inflation actually positive for gold. Now, if this is the first time you see this, you missed the past videos, hit the subscribe button. It takes you 1 second. You don't miss any of the videos. And you do something good for me, the German. You know, hey, why not do something good for the Germans? So this is the fourth factor. And then the fifth factor that just happened on Friday on the back of the super hot inflation data is the bond market with a monster rally that caught everybody by surprise and just absolutely ripping. Here's the 30-year. And look, if I zoom out, actually I'm going to go to the weekly because you're going to see this a little better. We are about to break out from a 2.5-year bottoming formation in the 30-year bond yield. That is hardcore if this is confirmed. And we already had the highest close that we've had in this whole correction, so we're very close. 10-year broke the downtrend, hasn't confirmed the downtrend yet, but broke the downtrend. So that is obviously signaling, hey, higher interest rates are coming, and that is freaking out the precious metals investors short term. So there you have the reasons. Now let's take a look at the chart of silver and see what we need to pay attention to. Let me get back to the daily for this. And it looks worse right now than it is. As you can see, we're fighting with the 50-day and we're fighting with the uptrend. If this holds, it's a big if with what we're seeing in the bond market. But if this holds, we're fine. That would mean we would make the third higher low and then everything is okay. Again, no reason to freak out. We break the uptrend. That is the first major warning sign. But the real signal is obviously if we fall below this zone right here. Actually, you know what? I can draw this all the way back. Oh, this goes all the way back here. I can just see it. So here we go. So this was live technical analysis. So this is the zone that we need to pay attention to the most. This runs around 71 to 70 US dollars an ounce. We break below this, we're going to make a new low. And then the 200-day is coming for sure, which will be around 65.50 by that time. And then we will reassess. But right now, this is the reason why I said when we made the higher high, hey, shift your strategy, but don't go all in. Don't go all in. So we're going to have to wait what's happening on Monday and Tuesday. Very important. I'll keep you closely updated on what's going on with silver. Now, have a great weekend. Bye-bye.